Welcome to the Deep Dive. Today we're going to unpack some really interesting analysis we've come across. It's from an expert, Josh, who thinks he's spotted a genuinely overlooked opportunity. We're talking about what he calls an asymmetric risk-reward setup. Now, for those maybe less familiar, that basically means the potential upside seems to, well, dwarf the potential downside. Creates a pretty interesting situation. Our goal here is to figure out why this specific opportunity stands out, especially in such a critical sector.
Yeah, and it's interesting because this isn't just, a flash in the pan. We're diving into natural gas. And its strategic importance globally is just, well, it's growing. If you look at the bigger picture, you see these really strong long-term structural forces at play. Think about the huge growth in global LNG exports. And then there's the power demand surge, driven largely by AI data centers needing just tons of energy. These are massive shifts, really reshaping the energy map, which makes this whole sector pretty compelling right now.
Okay, so you've got these big macro trends pushing natural gas forward. But how do you then zero in on one single company? You mentioned this specific natural gas producer. What makes this one so special? Why focus here?
Well, what's really fascinating, I think, is its underlying strength. Sometimes the market misses that. This company, it holds these really substantial acreage positions, mostly undeveloped, mind you, in North America's best, most strategic gas basins. We're talking places known for super low lifting costs, and they're close to major LNG export hubs. That's key. And beyond the land, the fundamentals are just, well, solid. They're well performance, getting initial production rates maybe 25% higher than the average in similar areas. They've got a proven inventory, too, like over 800 drilling spots lined up. That's potentially 2 decades of production runway. And crucially, almost no net debt, generating real free cash flow, unlike a lot of others who are still, dealing with past debt.
Right. That sounds like a really strong profile. Good assets, good operations, clean balance sheet. So why isn't the market seeing this? If it's that strong, what's causing this valuation gap? Why is it seemingly overlooked?
Yeah, that's the million-dollar question, isn't it? Josh's analysis points to the market valuing this thing at just a tiny fraction of what similar assets have gone for recently. I mean, you see private equity or bigger companies paying maybe 50% more, sometimes even higher, for comparable undeveloped land. And it's also trading way cheaper than its public competitors. His argument is, look, this isn't because the business itself is flawed. It's market structure. It's a stock that doesn't trade much, very low visibility, kind of like those classic hidden value plays you hear about from Buffett or Graham. It's just not really on most investors' radar screens, a real hidden gem, potentially.
Okay, so that makes sense. A structural issue, not a fundamental one. So this valuation disconnect,
Yeah.
how does Josh frame that as this asymmetric setup for, for us trying to understand the potential here?
Right. It basically means this might be one of the most skewed risk-reward scenarios in the whole natural gas space right now. Josh sees potential upside, maybe 200, even 300% if the market just starts valuing it like its peers or like those private deals. And the downside, he figures it's capped around, say, 20% because the balance sheet is so strong and they operate so efficiently. And as a sort of validation, you see high institutional ownership. Serious, sophisticated investors are already in there. They seem to agree with this thesis. They see the value that's kind of hiding in plain sight.
So what we've really dug into today highlights something important, I think. It shows how market structure itself, not just the core business quality, can create these really unique overlooked chances, especially in vital industries like natural gas.
Exactly. And maybe this raises a final thought for you, the listener. How often might genuinely valuable assets be out there, just hiding, obscured maybe by things like low visibility or how much the stock trades, factors that aren't really about the underlying quality? What does that imply for how you look for value? And, what other hidden gems might be lurking out there because of similar market quirks? Something to think about.